All right. So when I'm going through my daily routine and and like and again it's earnings season, right? So sometimes that will kind of throw you off in terms of what you can trade, what sectors you can look at. And I was going through my daily routine today and I just kind of came across a trade that I want to put on, but I want to get your, kind of like your feedback on whether I should or should not, or if I should go look for something else in another sector. But I definitely
Okay,
love this
so let me
trade.
dial this in then. Okay, so my job today as the advisor to the Queen
Yes, again,
is
because I don't have
is
time to chop off today again. So you
well,
gotta
we're still gonna kill him. Like somehow, some way, his head is getting chopped off today.
get chopped off.
Uh, it's like my daughter's Roblox streak. She logs into Roblox simply to keep the streak alive. We cut Tim's head off just simply to keep the streak alive at this point. No, so my job is to advise you as you are basically navigating us through your decision making process in finding a trade and whether that fits with what you're trying to accomplish. And my job as your advisor is to be like, yo, M, let's go,
Yep.
let's go. Or like,
They're like,
we need to go back to the drawing board on this one a little bit. Okay,
exactly.
I listen. I told Tim this last night. My favorite role in life is not to be the leader, but to be the guy that's in the ear of the leader. I just want a
Oh,
puppet master. That's my favorite role in life is puppet master. So I'll do some puppet mastering here today. I like it.
well, I appreciate it. Well, if you could let me share my screen so that you can kind of see what
Absolutely.
I am sharing here. Thank you very much. So kind of going through what we just did just now in the halftime report, we're just kind of going through our top-down market analysis, and part of that, and this is what we do, obviously, with our reports over the weekend, is coming up with your top-down market approach. Where do you see the market? What is your bias? So when you start to put all of these things together and you start with the overall market, well, what's the trend of the market? I think there's no argument in saying that the market is bullish, right? And so now you got to rank where it is. Like, where do you think it is on the bullish side of things? Is it a a one, a plus, a plus one, a plus two, a plus three? Well, for me, my bias is somewhere in that range of plus one to plus two. That's kind of like where I am right now with the market. We're hitting
Yes.
all time highs, and that's just kind of like where I am. So my thought process is now I've got to go look for things that are in that same trend, right? That same trend. But before I even go looking for that, I already kind of know in my head what patterns I'm going to go look for. We kind of talked about this earlier. You're talking about, the high base versus the retracement. I typically will look for high base breakouts or cup and handles. That's just kind of like what my eyes always gravitate to when I'm going through charts. So I don't want to overcomplicate things. We've got a gazillion things that we can pick from. So I'm not going to go looking for patterns that I'm not, comfortable with or don't particularly like trading, like, those ascending triangles or whatever the case might be. My go-tos on the market is at all-time highs is going to be those breakouts or retracements. I'm going to keep it that simple, right? Um, so going through that, I then have to go look at my portfolio and see what I currently have, which sectors am I currently exposed to, and so on and so forth. So you're looking here, we've got some, we've got one energy, materials, we've got, some consumer discretionary, we've got healthcare, financials. So I'm pretty much well diversified, but I could add some exposure here or there, or maybe perhaps take a little bit out, whatever the case might be. But I still have to go through my daily process and go find stocks to trade, right?
Yeah.
So I'm going through this, and I still really love that consumer discretionary area of the market, right? It's just just been doing well over time.
Ah.
If we kind of quickly go through all the different sectors that we have here, we and you guys talked about this yesterday with when you do your sector roundups, but we've got basic materials, breaking out there at 85, right? You've got communications, not the prettiest one that you can look at, right? And you go down the list here, we've got energy, we've talked about it, energy, financials looking great. Bank of America's, just always just a very, very good trade of mine. I definitely love financials. We've got industrials looking to break out. So there's so many things that you can find. Look at technology, look at staples. Real estate is just, inching to break out there at 49. And then you've got utilities, you've got, your healthcare, and you've got your discretionary, right? So we're looking at this, and I really love this space in discretionary. So I'm going through my watch list, and what I typically will do is I have a watch list that has everything broken down by the sectors. So I just kind of go through and glance and find whatever I can pick. So I was going through that, and I found this little darling here in Lowe's. It's the pattern that I'm looking for. High base breakout. I can identify where that resistance level is. I can identify where support will be for my stop loss. Easy trigger, once it breaks 235.90 or 236 zone right there, if you use your ATR rules, 10% above the high, all those things, right? So it's just an easy thing for me. You can see how I was just kind of sideways channeling here, and then we had that breakout, and we've had this run, and now we're kind of slowing down, letting the 9 EMA catch up to those candles. We've got a perfect area of support zone, significant whole number there at 230. It's just easy for me, right? I can just look at this and just go, I love this. So if my bias in the market is a +1 to +2, then I got to put together which strategy I'm gonna apply, right? Because I want to also make sure that my strategy matches where my bias is, and then also looking at at implied volatility. Are options cheap? Are they expensive? Should I go cash flow? Should I go delta? So with Lowe's here, being that I am, at a +1 in the market, my brain already tells me we're going to go bull call, right? I'm not going to go long call. It's fairly expensive stock, so I'm not going to go, the direction and just buy a long call. I'm going to do a bull call. Now it comes to a matter of, which of these expressions am I going to look at? I'm looking at the December, or we can go a little bit further out and look at the January. Okay. It's just going to be all a matter of cost. Now, I would love to have something that's like in that 60-day range here, but we don't have that. We've got 45 and we've got 80. Yeah.
As your advisor, would you like me to hold my commentary till you're done, or as you're going through this selection process, would you like me to
Add, please.
Okay. And I just wanted to make sure, because again, when we're talking about the bull call, once the strategy is selected, the first thing you have to decide is time frame.
Yep.
Right. You've said I want some bullish delta. Right. I want some bullish delta. I have enough in energy. I have enough in finance. I know the conversations you and I have all the time, and I know the conversations we've had on Queen's Court for a very long time. And you don't need more energy. You don't need more finance. I think you own half of Bank of America at this point. and so you don't need that. What you need is you want to take advantage of some of the momentum that has been playing out in discretionary, and it's kind of left you behind a little bit because your focus was on finance, energy, healthcare, those things, and they've done really, really well, but so has discretionary. And so now you said, I want some discretionary. I don't have access to it in my portfolio. I'm going through my watch list. I found lows. I want to match my strategy to my bias in the marketplace. You could match it to your bias in lows, though. And so, for example, and what I mean by that is when you're looking at your bias to the market, your bias to the market has to be, and it's right in line with the tackle bias to the market. Obviously, you're going off the newsletter there. We're ranked right there at 20, which is right in that combination +1, +2 territory. But that's really for your portfolio delta. And that's going to be an important question I have, is what is that portfolio delta, and does your portfolio delta match your market bias to a certain extent? But in lows, this is an increasing momentum condition where you're analyzing it as a high base, which is a breakout trade, which is a momentum based pattern, and you have earnings coming up in about 17 days from now, which means you have a tight window that you're fitting within that time frame before earnings, which means I don't mind the bull call side of the equation here, especially with elevated volatility. I don't have any issue with that. You could go straight call if you're taking the directional one, but I do like the bull call because elevated volatility. The question is time frame, though, right? In this time frame, you're debating internally December versus January. typically speaking, I would say let's rock January. We're 80 days out. We have plenty of time there.
Mm-hmm.
Theta's not going to be that big of a concern. You're perfectly fine there. But we're trying to fit this within a very tight window in front of earnings, right?
Yep.
And so I do feel like we can go down to a lower time frame. We're not going to be carrying through that ultimate last 30 days, which is where the real theta starts to really start to kill that trade. But remember, you're in a spread here. You're already mitigating theta to a certain extent with the call option you're buying. It's got a
Yep.
theta right around 9. With the call option you're selling, it's probably going to be somewhere around the 3 or 4 range. You're already offsetting the theta. That's mitigating simply by doing the spread. And so I kind of like working in that 45 days, knowing full well you're not holding a bull call spread through earnings.
That's true. All right. So you've helped me eliminate that. So when it comes to now which strikes we're going to buy and sell, I'm going to go the at the money at 230. And then I'm going to make it a 20 wide because I'm going to try to get that delta as closest to 25 as possible. But so I'm going to go with the 230, 250.
So basically you're and again to go on my theta,
Mm-hmm.
you're losing 9 cents a day.
Yep.
You're capturing 7 cents a day. So
Mm-hmm.
you're already mitigating that theta. So I like that spread. I like that spread, and you're right in line with kind of where that rule at tackle trading is on a bull call. You want that net delta around 0.25. I like the general makeup of the trade so far.
So now that's going to get me out of pocket at about 774. And when I put this on the risk graph, and let me take out these other ones that we had on here. So we're looking at this one right here. We can take this out and take that one out. So here's the risk graph. And once again, it's a high base breakout. So I'm anticipating that breakout above that 236 zone. I'm profitable as long as it's anywhere inside of this here. And again, being out by earnings, which is November 17th?
17th or 18th.
17th, yeah, November 17th. So earnings before the 17th. That is kind of like what I am contemplating. Or should I just say, you know what, forget it, go find something else, go back to the drawing board and start all over again. But this is kind of like where I'm just itching to just stay in consumer discretionary this week for my trade of the week.
Well, in consumer discretionary, there's a lot of elevated price action in consumer discretionary given the backdrop of what's been happening in discretionary. So there's a lot of stocks that may set up in a week to 2 weeks, given the fact that they need to kind of reestablish triggering and so on and so forth. But when you're looking at lows, you got a nice high base consolidation. The 9 EMA is just caught up to it. Your trigger is above the breakout channel. You're playing right in front of earnings, which means you're going to be looking at a short-term swing trade. You're being as conservative as you can. The question that I have, because I don't have a problem with I have no issue with the stock. The only question I have is Home Depot or Lowe's, right?
Oh.
That's a question I have. Home Depot looks like a little bit of a hype base, flag based pattern that's finding the 9 EMA. You're looking at Lowe's as more of a breakout channel at this point. Lowe's
Yep.
looks, they both, it kind of feels like if one works, both works type
Mm-hmm.
scenario, since they are trending very closely to one another. But with Lowe's is at that breakout channel a little tighter than Home Depot is. And so
Mm-hmm.
Lowe's most likely will trigger in front of Home Depot here, which means Home Depot will probably be lagging the price movement on Lowe's. So I do like Lowe's a little bit more today. I would have had a different opinion on Friday last week, though. That little bit of a move down broke that high base scenario, and now you're looking at a little bit of a combination of flag. Still bullish, still a bullish pattern, but you just got to recover that intraday analysis a little bit. So I do like Lowe's here a little bit. It's sixes though when we're talking Lowe's versus Home Depot. I like you trying to take advantage of the directional movement that's been happening in discretionary, although that could be slowing down just a little bit as we're at elevated price thresholds as well. The
Mm-hmm.
question I have really goes to the original premise here, Em. You first started off saying my bias in the market is that +1 to +2 territory. And so ultimately, the first question I have isn't what you need, it's whether or not your portfolio needs that. because if
Mhm.
your bias, if your portfolio is not matching your bias, you might have other things to do before that. So if you'll take me to the monitor tab very quickly,
Uh-huh.
we're gonna do some things here. And if you'll go ahead and beta weight that, please.
Sure can.
Find me your net delta, M, if you can do that for me. Go to that old layout. Let's see if we can add up that net delta here. Do me a
I
favor, just if you
something.
don't mind, just kill Airbnb and kill
Okay.
Tesla. They're in simulate
Okay.
trading. Sometimes the delta numbers get just absolutely off a little bit, so we're gonna fix that up to show the. And I believe we have one more. No, we
Okay.
got a delta number. We got a delta number. Okay, so that delta number you have is, and again, the spider trade is kind of offsetting it, but you can kind of take the general principle here. Right
Mm-hmm.
now, you have a delta in your portfolios weighted against the spiders at 276. Now, that tells absolutely nobody nothing. Not
Mm-hmm.
one thing. It tells absolutely nobody anything. But it tells me something very important here, Emily. And if you'll go ahead and let me share the screen very quickly here, I'm going to share a trade journal out of Tackle Trading, and it's called the Portfolio Trade Journal. And if you look at the portfolio journal over here, you can kind of fill out the trades and track your portfolio over time. But the
Mm-hmm.
concept I want to kind of analyze here is what's called delta weighting. And what delta weighting is, it's basically mathematically looking at your portfolio's weight in comparison to what you have determined as your market bias. So let's say you have $100,000 in the account. Yeah.
Mm-hmm.
Okay. Well, when you tell me you want your market bias is +1 to +2, that tells me where that delta needs to be in line with. And so
Mm-hmm.
if I were to look at your portfolio and you have what, a 273, was it? What was the delta number?
276. Yep.
276.
270. Yep.
So we'll just call it 275. So right now you have a delta of 275. So right now, based on what you just showed me, your portfolio that we just looked at has a delta of 275. What that tells me is your bias in your portfolio is actually underrepresented. Your bullish trades are underrepresented in your
Mm-hmm.
portfolio. Your portfolio is actually neutral to slightly bullish here. You have a slightly bullish lean. Now, obviously, that's a virtual portfolio, not your real portfolio, but you
Mm-hmm.
get the concept here.
Yep.
Your portfolio delta is not matching your market bias. What that actually tells me is you need more than just lows.
I
You
go
need a
long.
couple. You need a couple other bullish trades out there. You need to get a little bit more aggressive. We might want to reassess mitigating your theta number and open up that low straight a little bit more and go straight call options here. But so in terms of answering the question as your advisor, I would say a couple things. Number one, as we're making sure that Lowe's fits exactly with what you're trying to do, the analysis on Lowe's is spot on. You're looking at a breakout. You're wrapping a conservative option strategy called the bull call spread onto that breakout. You're fitting it within a tight window. You know full well going into the trade where my entry is upon the breakout, where my stop loss is. I got an option strategy that is conservative by nature. All of that is fantastic. But again, I come back to that original premise. Does your portfolio even need a bullish trade? And
Mm-hmm.
based on what your portfolio delta is, based
And
on what your market delta is, you need not just one bullish trade.
you
We
need
need
more.
we need we need, we need to pick up the bullishness a little bit. We need to get some of those covered calls working. We need to get some of those directional. And again, we're looking at a virtual trader there.
Yep.
But again, the concept maintains. When you're asking yourself, this happens all the time as traders. We find a trade and we're like, oh, that's the best trade. That's the best trade. Let's go do it, right?
Uh-huh.
But again, ask yourself a question. Does your portfolio need it? And the
Yep.
answering of that question is all about market bias versus portfolio bias. And right now, your portfolio is telling you, M, I,
And need
I, I
need
want more delta.